What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. No major changes to our watch list this week. We did remove ApeCoin just because it's not going anywhere. The momentum certainly has died out. If it comes back on our radar, we'll add it back to the watch list. But for now, let's kick things off as we always do on our Bitcoin daily time frame here. A couple of concerning developments have unfolded. Firstly, if you remember, we've been talking about this range right here. We did start to get the break retest, and it looked like it wanted to hold on last Friday's session as we printed this hammer candle. We got a little bit more price acceptance above that 45,800 level, but nonetheless, over the past 4 or so days, you can clearly see we're back down inside of this area of daily balance. So this does start to trigger the look above and fail pattern. The only saving grace is that we now have a support trend line. Anchor is there. There's touch 1, and it's starting to coincide with the top end of the micro balance. Remember that we also had this area right here, and I would say it's not the end of the world if Bitcoin can resolve this area to the upside. Just to give a rough number, it's about $42,000 per coin inside of Bitcoin. So as long as this holds, I don't think it's the end of the world, but do know the chart is not developing in as bullish of a manner as it could have potentially done. Remember, a break, retest, and go would have been the ideal scenario to break out of this daily range to the upside. If you want to be a little bit more conservative for long entries and you're not willing to essentially buy the pullback here at this area of support, that's fine. Your next major entry point at this point in time is just going to be up and over that resistance trendline, clearing that 45,800 once again. And if that cracks, we do know that we will now have to contend with the highs right there as resistance. So that's going to be roughly $48,000 per coin, which is going to make the upside a little bit more difficult to trade, right? If we go back to an auto fit chart here, you'll remember that our prior resistance that we were aiming for was essentially $51,500 per coin. Now there's clearly multiple pieces of overhead resistance that will make that move a little bit more difficult to achieve. So not the end of the world in Bitcoin because we do have this area of support right here, but if it starts to break, that's a much more risk-off indication or even potentially short Bitcoin, noting that we have the look above and fail pattern unfolding here on the daily time frame. As you know, the target is always going to be the bottom end of that given range. So that's what I'm watching out for here. This move has me slightly concerned, but the support trend line is our saving grace. Let's continue along and get into Ethereum. What's going on in this chart? I think most of our charts will have a similar look and feel, whereas the many of these moves are starting to test, if not break back down into daily ranges. Ethereum's a little bit better in the sense that we're kind of still trying to resolve the top end of the range here. We're not firmly underneath like Bitcoin is, and you can clearly see relative strength in the sense that we are still well above that primary support trend line. We also don't really have a flag resistance trend line to contend with, so as of right now, the critical hold is 3250 roughly inside of Ethereum. As long as we can hold up around this area, it's clearly going to produce a higher low pullback here, and it will be outside of this daily balance right there. So a little bit more confident actually in what's going on in Ethereum here. Our upside targets are slightly changed. Instead of shooting for this 3465 now, we're just going to go to the top end of this sort of, I don't want to call it a fake breakout because it's not a fake breakout yet. A fake breakout would really be back down underneath this area right here. Let's just roughly round that up to $3,000 per coin. Nonetheless, our target's got to be here this time around, right? To make this risk reward worth it, if we're getting long here on the hold of this pullback, our stop goes here, our target's got to be up there, right? That roughly makes sense for at least a 2-to-1, if not maybe 2.5-to-1 risk reward ratio. And as soon as you can get your stop loss to break even, it would make sense to do so, right? So that next resistance overhead, it's slightly below our prior support point from in here. We know that's where the major flush came from, around that 3658. Let's drag that down just a little bit. We'll split the difference between the two, and we'll call it 3562, okay? 3600 if you like nice round numbers. Nonetheless, in this area, look for a continued bull flag consolidation to form. If we break out up and over the highs, our next target's roughly 4,000 per coin inside of Ethereum. So again, a little bit more relative strength than what we see in Bitcoin, but nonetheless still seeing that pullback and getting a little bit deeper than in an ideal bullish scenario. To the downside, we pointed out critical support down here around $3,000 per coin. If it gives up, we know that the support trend line is what we need to have hold essentially to remain bullish in the long term and continuously producing higher lows to remain bullish bullish in the long term as well. Do note that on that longer time frame horizon, if that's how you look at these crypto coins, we are technically still in an uptrend, right? This did produce a new higher high inside of Ethereum. Let's continue along and get into Binance Coin. Similar thing here. However, you'll notice that there really wasn't much of a breakout from the daily range. There was basically no price acceptance above 446. We are getting into this support trend line that strikes me as bullish. We're starting to hold here. The obvious trade to the upside is just acceptance above that 446. So if we can crack it, make sure that good volume is coming in to support the momentum style move, and your next target would be up closer to $500 per coin. At roughly, a 54-point range to be trading for here, it makes sense, especially noting your stop loss can be tight underneath the support trend line. So to me, this is also checking out as a reasonable trade to the long side if we can get some acceptance up and over that 446, looking for follow through, tight risk, right? We have that support trend line that we can use as our out. If you want to use a horizontal area, I would start looking at this one right here around 419. Any further consolidation, even if we break the support trend line sideways through time, as long as we're above 419, it strikes me as bull flag consolidation, just like this. And again, looking for breakouts over the course of time. If this breaks down, we know our next level underneath is 393. And at that point in time, we would just be more neutral on Binance Coin, noting we're smack down in the midpoint of the range. And if you've been watching the channel for any period of time, you basically know that our edge does not exist in the middle. It literally exists at the edges for a breakout or mean reversion type trade, or at the bottom, same but opposite, right? Mean reversion or a breakdown type trade. In the midpoint, you've kind of got 50-50 odds, which obviously produces no edge. So that's what we've got in Binance Coin. Let's continue along. We've got Cardano pulling back into that 38.2 Fibonacci retracement. You can clearly see, you can, sort of classify this as a double top. There's your neckline breakdown point. In the short term on something like an hourly chart, yes, this would be a sort of bear flag consolidation pattern. As long as we're above $1, remember we were using that as a line in the sand from last week's video. As long as we're above $1, I think things are fine, and this pullback is still well within play for the bull side on the daily time frame, right? Anything that really consolidates up here, fine. Ultimately looking for continuation over 120 over the course of time. It could take some time to resolve, but currently the momentum is to the upside. We're not giving back too much of that run just yet. If the bear flag pans out and takes out $1, that's where I'm more concerned to the downside. Obviously, the nail in the coffin would be a lower high that forms underneath for continuation back down closer to this 80-cent mark. And again, remember that the percentage moves on something like Cardano that's trading around $1 are going to be pretty high. So you don't want to overstay your welcome if you're wrong about the pullback holding a buck and thinking that it's going to do this. I mean, not to insult anyone's intelligence, but you're taking a 20-cent loss if we go from $1 down to 80 cents, right? That's not something that you want to get wrapped up in. So please use $1 and respect that level as a critical must-hold area of support. If it doesn't, I would be more neutral and only shift bearish if we start taking out 80 cents, because we know that that is a major shelf of daily support on Cardano. Anything underneath that, look left, it's probably coming back down close to about 18, 15-ish cents, which clearly, again, from a percentage standpoint, does not make sense to do. 80 cents is here. Next one underneath is 41 cents. So again, 50% loss if you held from 80 down to 41. You get the point though. $1 basically needs to hold inside of Cardano. Otherwise, we're starting to shift our bias back to the downside, and it would ultimately be, in the grand scheme of things, on like a monthly time frame chart, just continuation of this downward channel that we have in place. Next up, let's go ahead and talk about Solana. What's going on in Solana? At the support trend line, just like Ethereum, or more like Ethereum rather, you can see a clear break of the daily range. There it is, a pullback reasonably into the support trend line. Let's quickly take out the Fibonacci's to gauge where our 38.2 is from the low up to the high. So just underneath the 38.2 currently, still clearly well above the 61.8. Fibonacci's, they're helpful, but in this particular sense, I wouldn't go based on that. I would go based on the support trend line and also our prior structural highs right here. So we do want to see it back up and over 118. If it starts to break the support trend line, then I would look for lower, basically filling up the triangle, right? That triangle basically is right here. Your next support underneath, 101.50, 102, coming from prior structural highs on this little flag. It led to a breakout, right? So that would be our support to the downside if this is a failed move into the support trend line, basing, the same sort of ideas what we discussed in Bitcoin, look above and fail. If we crack this area, ultimately over time, the target should be the bottom end of the range based on this being a failed breakout, right? Buyers get disappointed, they don't get paid, shorts see that momentum, and ultimately we could potentially come in for the retest of the bottom of the range, and that's why that acts as the target. To the upside, if we can get back above 118.29, you can see on the way higher, there's really thin structure on the way down. The first place that you might expect some resistance is the low end of what started to become bull flag consolidation up here around 132, we'll call it for round number 6. So that's your first upside target. Obviously, after that, the highs from this move could potentially be in play. Let's go ahead and map that in together. That's roughly 141. So about another $10 on top of that first initial target. Just like Bitcoin and Ethereum, I do think the risk reward profile is attractive here, noting that if we can get long back above 118, stop goes under the support trend line, first target is up here. That's clearly much better than a 2-to-1, 3-to-1 risk reward ratio and could be a valid trade setup. Obviously, if it cracks and you're looking for downside, you would just stay away to the long side and be patient, right? Wait for that next potential setup to reveal itself. Continuing along, we have Link coin. What's going on in Link? This one never got out of its own way. Again, that's kind of the equivalent of the Bitcoin daily range that we've been discussing. In terms of this smaller range, right, you could look at this as a break retest. Is this going to hold is the next question. We do have some hammer type candles forming around this prior double bottom neckline, which is semi-promising. If we can take out the hammer highs, that's your long setup to get back up towards that 1765 target with a stop just below. Again, the risk reward makes sense. You're risking this for potentially this up here. I don't know if that's roughly a 2-to-1, 1.75 to 1. It makes sense. Again, if you can move that stop to break even, that's exactly what you want to do. So, long side looks favorable based on the risk reward profile. If we hold here, anything that accepts underneath 15 quarters starts to become more bearish, getting back down firmly underneath prior support, flipped resistance for that double bottom neckline, right? And we would expect to move back down to here, roughly 14. So that's where the trade is sort of invalidated if we get back down underneath 15 quarter. To the upside, our target, as we pointed out, is just the highs from here, around 1765. There's not a ton of structure. There was no clean bull flag that went perfectly sideways in here that we can use as first resistance. So ultimately, I would just look for the retracement through this thin structure that we had on the downside. Next up, we have Polkadot. What's going on in DOT? This one clearly breaking the support trend line already, an aggressive lower through price, not necessarily sideways through time, which is a little bit more of a bearish indication in the first place. The other thing I would point out is that if we look at this as a range, it never made it out of the top end here. But if you look at this as a double bottom, there we go. There's your double bottom. We're at the neckline area of resistance, which now could potentially offer some support. Very similar to Link, based on the fact that we had one green bar. If we can close this daily bar right here, the current daily bar, which has roughly 4.5 hours left on it as a hammer candle, again, taking out those 2-day highs, look for longs. In this one, we do have a neckline here to contend with, prior resistance, which then clearly acted as support around 2131. That's your first target. In this case, again, if your long is here, and your first target's there, you've got to use a little bit tighter of a stop. So you would not want to see it fail back down underneath those 2-bar highs. But if you're ultimately targeting the top end up here at 2335, then yeah, maybe if it's long here, for this entire move, so more of a swing trade mentality, then a stop could go underneath the lows as long as we respect 1975, all right? So that's what I'm seeing in terms of structure here in Polkadot, but do note we have the break of the support trendline, which strikes me as a little bit more of a bearish implication in the first place. To the downside, if we cracked 1975, notice how in here it's a really grindy move. The first level that you might be able to make the argument for support coming in at is roughly 1833. We're going to map that out together. You can see prior support for that little dead cat bounce, resistance in this general area, but more importantly, here's this resistance and here is this support as we continue to make our way above that double bottom neckline. So to me, the numbers to pay attention to, mainly 1975. How do we resolve this? If we can take out the 2-bar highs, looking for that trade long, and if we continue underneath 1975, ultimately 1821 is that next level underneath. Continuing along, Crypto.com coin, what do we see here? Continued tightening in this overall range. Notice that this was your range, right? We have a break, retest once, double top, resistance trendline is now in effect, right? And we're back down at that breakout point. So to me, 44 cents needs to hold. If it doesn't hold, we're back down in the chop. We're potentially breaking that support trendline, which we know is coming from the ICO, initial coin offering way back here. And that would be a pretty significant break at this point in time. Again, I would look to be more neutral in this overall range and look to be more bearish underneath about 37 cents. So not really favoring longs until this one wants to do a little bit more work and prove itself up and over the resistance trendline, right? That would sort of be a flag breakout, something that does this. You're looking to fill up the first triangle, so a break here, look to go here based on prior resistance and also prior support from right around in here. That's roughly 51 cents, okay? I'm not sure what the risk reward would look like based on what we currently have in play on something like an hourly bull flag that forms up here. Maybe the stop goes underneath the flag lows and you're looking for that breakout, but currently, based on this inverted hammer, it doesn't really look too promising in the current position, quite frankly. Again, just sort of testing this support after holding it once. And again, you get sort of a bear flag activity going on here. If this cracks, I would be pretty skeptical inside of Crypto.com coin, which again is why I wanted to see it do some showing and proving by breaking that resistance trend line. Let's continue along and get into Matic. What's going on in Matic? Clearly much more neutral, even slightly more bearish, to be quite frank. If we do something like this, here's your range, failed break, never took out this pressure cooker top, which actually looked quite promising into last weekend and this upcoming week. It never did it, right? So 173 was never taken to the upside, and instead, you can see we're firmly back down inside of that range that I just had drawn out. We're even deeper than that 50% retracement mark. We are, of course, forming a bear flag in here. I would be patient in this one. If we do come all the way to the bottom end of the range, maybe there's a reason to sort of bottom fish for longs in here. Stop goes there, looking for a retracement back to the top, right around in there, around that 153. That's one potential setup based on a risk reward profile that seems favorable. You can see how that, easily comes out to being at least a 2-to-1, 3-to-1 risk reward trade. But if that cracks at 135, we'll call it for round number's sake, look left, the next major support is coming in around 116. Again, you got to respect that stop if you're going bottom fishing here, especially noting on the longer time frames, on something like a weekly, you can, and on the daily we can see it as well, but you can clearly see and get the sense that we have continuous lower highs being produced, right? So be careful of that 135. If you're really aggressive, again, fine, bottom fishing longs, respect the stop, and just looking for a scalp into 153 on the upside. If we don't make it there in the first place, the next long trade, if we do something like this for a higher low and travel back higher, the next long trade is still all the way up and over 173. So it's a patience move. If we never make it to that 135 in the first place, that's your next breakout point for a favorable long, noting the poor structure that we have here. Targets to the left would be the first lower high from here to here, which is roughly 187. Continuing along, Luna, which is actually Terra, right? You can see it's pulling back off of a new all-time high. That to me is a good thing. Remember that we were looking for this follow-through on the break and retest into all-time highs. So it did set the higher high, which means a higher low pullback is technically viable on any sort of reversal pattern that we see. Ultimately, you can see we're getting underneath that secondary support trend line, which, don't get me wrong, it is a secondary. We do not expect those to hold forever. Instead, we really want to see this breakout point here around 95 hold up on this pullback. If we can hold up here, if we start printing anything that looks like a hammer candle, anything that looks like an indecision doji, basically slowing the strength of the sellers here, I would look for any reason on a smaller time frame, either a 4-hour, an hourly chart, to get long off of this back test of prior resistance, which now is offering support for a rotation back higher to the all-time highs, noting that Luna has been showing and exhibiting relative strength for quite some time now. I mean, look at this chart compared to almost everything we've seen so far. I mean, clear winner in terms of relative strength, right? So looking for any reason to buy this pullback, as long as we respect support, $95 is the level that we want to see hold. At this point in time, I wouldn't put too much weight into that 103, and instead I would start targeting, or a retarget of the all-time high around 117. All right, and to the downside, if that does break, notice that the primary support trend line is right below. Could be roughly, I don't know, let's call it $92 to $90, depending on time of week and if we see continuation to the downside in the first place. Remember that was struck from here. First touch 1. We do get into it here. Perfect back test when it's recaptured. Notice how it holds. So I like that trend line as an inflection point. Doesn't have to hold forever, but it would be worth potentially risking some capital essentially at that level to see if we can get the reversal off of it. Noting once again that we do have that higher high, an all-time high inside of Luna. Next up, we have Mana USD, Decentraland, 4-hour sort of metaverse play. What do we see in this coin? Again, fairly, I don't want to say disheartening, but certainly not as nearly as bullish as some of the other coins we've seen so far. It never made it out of its own way from this little range that we had here. This hammer candle pullback never resulted in, because we did have a higher low phenomenon like this, right? It never took out the top end of the range. It never made a new higher high. And instead, you can see we're clearly getting some price acceptance down in the lower 50% of this overall range, which once again strikes me as being fairly bearish. On this one, if we crack 225, you are looking for lower all the way back down towards this area in here. long lower wicks on our daily time frame around 182, right? That's the downside play here. I wouldn't be fishing for longs in this one until we can crack the top end of this range and get out of our own way. So if it wants to play ping pong a little while longer, that's fine. I wouldn't necessarily look to be aggressive in terms of building a long position in this area. I would be patient for the break of 283. As we know, the next target would be this prior double top around 345. Next and lastly, we have ZCash, right? What's going on in ZCash? Remember what I said in last week's video? Once you've observed a phenomenon for a number of times, it's very likely that there's potential it does not happen on, after you've observed something over a period of time, right? And everyone and their sister can see it. It's very likely that it will stop working at some point in time. Once you've observed the pattern, it can oftentimes be too late to take advantage of, and that's exactly what we saw here as we got into the support trend line. Don't get me wrong, we did print a hammer candle there, which was bullish. It was at this area of support. It was off of a higher high, but that support trend line is only going to work so many times. It's only going to work so many times. We ultimately didn't take out the high of that hammer candle either, so it didn't technically trigger a daily buy setup here. Instead, I think we should be patient at this point in time and see how this level wants to resolve. Around 175, 173 is technically the number that we have based on prior resistance here. If this wants to resolve in a bullish manner and continue to put in a higher low, something that respects this kind of trend here, that's great, but I think the next setup needs to be based on a smaller time frame pattern instead of a daily pullback into our support trend line. So let's go ahead and remove that. It's obviously no longer in play. I just quickly want to take this from here. Yeah, it's too soon to call that in play either. Sure, it is getting a little bit of a bounce, and you could call this anchor and touch one here, but I would really want to see a little bit more confirmation before we leave that trend line on our chart. So in terms of Zcash, probably patience required here. If we continue to go sideways and develop a range, something that does this, fantastic. You know the deal. We're looking for longs up and over the top of the range or shorts down and out underneath the lows, or if you're not inclined to short crypto, that's fine. Be patient for the next area of support, which is technically here around 135.50. So that's ultimately going to wrap up today's crypto report. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget the weekly watch list video will be coming out as scheduled on Sunday. And with all of that being said, I wish you a green trading week.